Bitcoin just broke below a key support level, billions in never-sell coins are suddenly underwater, and the people who swore they'd hodl forever are quietly reaching for the exit. If you own any crypto at all, this sell-off is not just about price. It's about whether the entire Bitcoin is untouchable story is cracking. I'm Thomas Paul. This is the comment section, and today we're breaking down the Bitcoin sell-off wave, who's in trouble, and what this actually means for you. Here's where things get interesting. Let's start with what just happened. Bitcoin didn't just dip. It slipped under the average price that some of the biggest corporate hoarders paid for their coins. I'm talking about companies that turned their balance sheet into a Bitcoin shrine and said, "We're never selling, only buying." That strategy looked brilliant on the way up. Their stock price went vertical every time Bitcoin made a new high. They weren't just a software company or a tech company anymore. They were a Bitcoin proxy. But the moment price dropped below their average purchase price, all those victory laps turned into paper losses. Their share price started bleeding. One big holder is down more than 60% from the peak, even though Bitcoin itself hasn't fallen nearly that much from its recent high. That's what happens when your business model becomes leveraged bet on one asset. But it's even getting worse because this isn't just about one company. Tons of miners, ETFs, and public companies piled into the same story. Just hoard Bitcoin. Don't sell, number go up, the end. That works, until markets remember gravity. The sell-off is scary not only because prices are down, but because of what people are watching for next: forced selling. Here's the setup. If you borrowed money to buy Bitcoin or issued debt or diluted shareholders so you could stack sats and the price goes below your break-even, lenders get nervous. Boards get nervous. Regulators start asking awkward questions. And here's where things take a step further. If enough of these big players are squeezed at the same time, they may have to dump coins on the market just to survive. Not because they want to, because they have to. That's how you get a feedback loop. Price drops, panic rises, forced selling, price drops more. We've seen versions of this movie before in 2018 and 2022, anytime leverage and ego get too comfortable. So when you hear tidal wave of selling, it's not just retail traders rage quitting on their phone. It's the possibility that the never sell whales suddenly become, "Oh no, I have bills to pay" whales. But then the unbelievable thing happened. The debate around crypto hoarding blew up again. Some investors are saying, "See, Bitcoin isn't a safe haven. It's just another risky tech asset." Others are doubling down. This volatility is normal. If you don't get it, enjoy your fiat. On one side, you've got the maximalists who treat any dip as a 50% off coupon. Their answer to every question is buy more, zoom out, ignore the noise. On the other side, you've got the boring people, the ones who ask annoying questions like, "What's your actual cash flow?" and "How do you make money if Bitcoin goes sideways for 5 years?" And I'll be real with you. In my early 30s, I invested in something insanely boring while everyone around me was chasing the next Bitcoin. Did it 10x overnight? No. It crawled higher over years, slow, annoying, and it actually worked. That's when I learned to side-eye anything that sounds like a once-in-a-lifetime rocket ship. Here's where things get interesting. So what are the actual key takeaways from this sell-off? First, hodl forever is not a business strategy. It's a meme. If you're a public company, your shareholders did not sign up for you to turn the treasury into a casino chip and then tweet inspirational quotes about diamond hands when it goes wrong. Second, Bitcoin is not magically disconnected from the rest of the market. Rising rates, recession fears, AI stocks sucking up liquidity, all of that matters. When investors need cash, they sell what's liquid. Bitcoin is liquid. Third, leverage is the real villain. Most blowups in crypto are not about Bitcoin going to zero. They're about people borrowing too much too fast on the assumption that the price will always bail them out. But it's even getting worse because now you have a new twist, the AI arms race. Big tech is burning tens of billions on AI chips, data centers, and models. That money has to come from somewhere. A lot of the risk capital that used to chase altcoins is now chasing anything with AI in the name. So if you're a retail investor, you're not just competing with crypto whales, you're competing with hedge funds rotating between Bitcoin, Nvidia, and whatever AI startup is hot this week. When AI hype is peaking, some money rotates out of crypto into AI. When AI cools off or regulators start circling, that money may slosh back into Bitcoin as a simple bet again. It's all one giant risk-on bucket. And here's where things take a step further. Policy risk is also creeping in. Governments are trying to figure out two things at once: how to regulate AI and how to control money flows in a world where both AI and crypto make it easy to move value fast. If regulators start tightening rules on stablecoins, exchanges, or corporate balance sheet exposure to volatile assets, they don't have to ban Bitcoin to hurt price. They just make it a little more annoying to hold, a little more expensive, a little more paperwork. And every extra bit of friction pushes some institutions to say, you know what, we'll just buy boring bonds instead. But then he said this unbelievable thing. So what does all this actually mean for you? If you're a retail investor, here's the blunt version. 1. Don't copy corporate hoarders. You don't have their credit lines, you don't have their lawyers, and your boss probably won't let you issue junk bonds to buy more Bitcoin. 2. Have an actual plan. If Bitcoin drops another 20%, are you buying, holding, or selling? Decide now, not in the middle of a panic scroll at 2 a.m. 3. Treat Bitcoin as a high-risk asset, not a religion. Can it still go much higher over the long term? Sure. Could it also spend years chopping sideways while AI stocks, boring ETFs, or even cash outperform? Also, yes. Here's where things get interesting. And speaking of having a plan, this entire channel is run on one. This video was created with Fludge.io, the same system that powers this whole operation. If you're watching this thinking, I'd love to run a YouTube channel like this, but I don't want to be on camera, that's literally what it's for. Fludge researches topics, writes scripts, creates thumbnails, uses AI avatars, and uploads videos for you. Your job is to review, tweak what you want, and hit publish. You can jump in at any step, give feedback, and over time the system actually learns your style. So instead of spending 10 hours editing, you could spend that time, I don't know, actually doing research on whether you want to buy this Bitcoin dip. If that sounds useful, check out Fludge.io after this video. But it's even getting worse. Let's wrap with what to watch next in this Bitcoin sell-off. First, monitor the big holders. If any of the corporate hoarders start selling even a small chunk, that's a huge signal. Not just for price, but for the narrative. The moment never sell becomes we trimmed a little. The myth cracks. Second, watch leverage data, funding rates, open interest, and any news about liquidations or margin calls. You don't need to be a pro trader, but you do need to know if the market is overextended again. Third, keep an eye on macro. Interest rates, inflation prints, and how hard the AI stocks are running. When everyone is crowded into one trade, that's usually when it breaks. And most important, understand your own risk tolerance. If your heart rate doubles every time Bitcoin moves 5%, you're probably overexposed. Disclaimer so the lawyers don't panic. None of this is financial advice. This is information and opinion so you can make your own decisions. All right, your turn. Do you think this Bitcoin sell-off is just another buying opportunity? Or the start of a bigger unwind of the hoard forever fantasy? Drop your take in the comments. If you learned something here, hit like, subscribe to the comment section with Thomas Paul, and share this with that one friend who only texts you when Bitcoin hits a new all-time high. I'll see you in the next one.